Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading floor. First and foremost, all glory to the Most High God. Let's bow our head and say a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again, to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray. Use me as a vessel to bring your children back unto you. In Jesus' mighty name we pray. Amen. Glory, glory to the Most High. Gets his praise each and every day. All right. Welcome. Before we jump into the charts, I just want to say this, all right? There was a time I used to sit down at the charts with no real plan, jumping between strategies, second guessing every entry, and honestly just hoping the trade would work. And that's where most traders are today. Not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, or 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the three pillars that every trader must have in their trading to survive and thrive in the financial markets. So you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% Club. Let's go. But before we dive deep into these three core pillars, when you step into this arena on this battlefield, you must first have two crucial realization. Realization number one, trading is war. This is not a get rich quick scheme. This is the hardest thing that you will ever do in your life. Realization number two, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think success in the markets come from having the perfect strategy or catching the biggest moves. But the reality is, trading success is built on three core pillars. First is money and mindset. This is the foundation of success. Next, we have risk management, the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. And that's why in today's session, we're going to hone in on your trading edge. Now, everything we do here is built around one thing, and that is confidence in your trading edge. And that confidence comes from three things. First, understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trading model. One model with IPTA signatures that you trust and execute on a consistent basis. Third and lastly, we have having a plan and process, because without a plan and process, you're just winging it and you're reacting to the price action. And this right here, this session that you're in today, this is where we focus on the third piece, the process aspect. I'm not here to force trades, all right? I'm here to execute my plan step by step in real time. All right, let's get on that trading floor. As you're watching, don't just look for entries, pay attention to the process, because this is what will get you into the 10% of traders who succeed. Excuse me, sorry. And if you want to go further to join the 1%, that's where we break down all three pillars inside of the program. I used to think winning trades build confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, why you're doing it, before, during, and after every trade. And that's what we're building here. All right, let's get into our daily processes. All right, weekly target going to this week is 3%. All right, mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today. Excited to continue to grow. All right, and get 1% better in these markets. I already feel like just yesterday alone I got 1% better, so I'm excited to compound that 1% going into today. Let's go ahead and acknowledge risk. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News. It is Wednesday, April 15th. All right, we had, let me refresh this page, make sure it's correct. Yep. We had medium impact news come out at 8:30. We have another medium impact news coming out at 10 and high impact news at 10:30 and another medium impact news at 2. Okay, so we have news today, making it an optimal day to take a trade. All right, so we're good on the news front. Sorry. Risk going into today, we're at 0.25 of account size that we have a max on the day on the account per account of 7.75. All right. Weekly program going to this week is a buy program. Let's go ahead and review price action overnight, okay, to see if anything's happened to change that for us. We'll also do a review of yesterday's price action as well. All right. Nothing's really happened in price, okay, to change our weekly program. For our weekly program to change, all right, price will have to come all the way down and take Monday's range low, all right, to then flip our weekly program, which we got a long way to go, but it's always possible, right, in these market climates. So nothing's really happened in price to change our weekly program. Let me adjust my 20-day. Low is good there. Cool. Draw on liquidity. All right, on the higher time frame, magic magnet. We've got a magic magnet on the higher time frame as well now, targeting this high over here on the higher time frame. It's a clear draw on liquidity. That's clearly, it looks, is even a 2-year-old can see that's where the market is trying to get to, right? But anyway, let's go ahead and talk about yesterday's price action. Solid stuff, magic magnet attracting price higher as it did. All right, our first initial draw was this was hit before we could even get into the market, but PM session, it ended up going to the higher liquidity that I had to go and search for. Remember the one I had to go and search for yesterday. But anyway, let's get back into, let's do a quick overview of yesterday and then we'll get into today. I should just have this ready on for yesterday before I even set this thing. PM session was super duper nice. Ooh. I didn't take any trades. I taped red. All right, we got a retracement set up and I was already tapped out. I used my 3 bullets on my retracement account. Okay, so I couldn't get into a trade even if I wanted to. That was just pure discipline. But yeah, beautiful. We'll get back into it after we go back into the morning session and see how the morning finished. All right, the trades that we were watching and the trades that we were in, how they panned out. All right, so this was the retracement, the first initial retracement setup that we took, and we watched this continuation setup. All right, let's see how much it gave us. Where did price end up going? I can look on the high time frame. Tripping. Ended up giving us negative 5.5, and the second one with the big range gave us negative 5 on that sexy stuff there. This was our initial continuation setup that we were tape reading, okay, and then we got a second retracement setup which failed. Then we got a third retracement setup which we understood was probably off. We were offside down in here, and then we got a continuation setup here, okay, that we taped red, which gave us a negative 5. Beautiful stuff. Going into the PM session though, whew, this retracement setup was so nice. Just so clean. Clean. Going to PM session, this was a 150 macro setup. 130 kicks off PM session, all right. We adjusted our dealing range. As you can see, dealing range was here. We took dealing range buy side. Swing high even takes liquidity above that. This swing low takes liquidity, making it a breaker. Not that we require a breaker in during the micro. Okay, micro we can take both mitigation and breaker, but this just happened to be a breaker entry. Take key external liquidity, swing high, displacement, market structure shift back below the external liquidity. We took this structure here and we also took this structure. All right, this one candle took two structures. All right, so I tend to go with the lower market structure shift or the highest market structure shift in deference to buying or selling. This one is selling. So entry was right here, stop was a little bit above this swing high, and I was paying attention to how price behaved in this inefficiency. My last line in the sand for this trade was the mean threshold candle body above this mean threshold, but as you can see, we never even got to it. I liked how price respected the lower quadrant of this inefficiency. The wicks do the damages, right? But the bodies tell the story. It was just so nice. It was just so nice. Gave us -5 on that. Once again, I taped Reddit because I had used all my 3 bullets for my retracement account. Okay, so I didn't have any bullets to use, right? So I just had to eat it and tape read it. I'd have no problem with it. It was a beautiful setup, met all the criteria. Sexy, sexy. This is the ideal setup. All right, I want to be getting into the trade where this is what the ideal price action I want to be seeing once I'm in the trade. All right, so this one is going down in the books as A plus setup for retracement setup. We like that. And then we got a continuation setup. All right, this retracement setup gave us the green light go ahead to then get into a continuation setup, which we did see here. But the range was big. It was the similar range to what we had saw in the morning session. All right, it's a big range. I didn't even check to see if it would have given me any contracts to get in. I don't think it did, but anyway, it did its job. It did its job though. Regardless of the range, it did its job. Anyway, let's get into today's price action. We've got 2 minutes until. But yesterday, I was just so happy, man. Just this week alone, I've just been so happy just looking at the candlesticks, looking at the price action and my understanding of the price action. It's just been amazing. It's just been amazing. Progression this week has just been top tier. Anyway, let's go ahead with our 3-step process. All right, nothing changes, different day, same processes. All right. Step 1 is condition. In order to identify our condition, we have to first know our dealing range, and we go from 12 a.m. to current price action. We note the lowest low to highest high, and just like that, we got our field of play. We got our dealing range. All right. Then we go ahead and we know key liquidity above and below dealing range that can act as our draws on liquidity. Okay, and as you can see, we have a high. I believe, yeah, but it's that high that I'm targeting up here, and I believe we have this high as well. And below dealing range, we have PM session from yesterday. And below that, we have a lunch session. And we have, what's this? Nope, that's nothing, that's the high. We'll take those for today. Yeah, we'll take those 2 for today. And just like that, we're ready to go. All right, now we wait for one side of the dealing range to get taken. That will give us our condition going into our session. Ding, 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 ding. Just made it right on time for opening bell. All right, opening range gap is below price. Okay, so we have a premium gap up. So we gapped up, meaning we have a premium gap. Weekly program is a buy program. Okay, so let's see which side of the dealing range gets taken today. We don't do nothing until one side of the dealing range is taken. Until we have our condition established, we don't move on to step 2, which is stage. I'm the trade-off. I misspelled this. low portion of the open range gap open there. Got 20-day high as a point of a level of interest for continuation inside of the dealing range. That's pretty much all I see. Finally finished the first draft of I'm the Trader Capital terminal. That place for journal, for journaling, right? But I'm making it like a terminal. First draft, I'm very happy with it. I won't be surprised if we take the range sell side today, because you're gonna continue going higher. So it's a possibility, isn't it? You have to say, I got somewhere to be, baby girl. I gotta go. I gotta go now. I ain't waiting on nobody. If you don't know, you don't know. But if you know, you know. One thing that I've been intrigued to doing, which I need to go back and back test, is when I come to the desk following the dealing range to see potentially what the storyline has been to what it could potentially be now. So if you go ahead and do that, starting off at 12, buy side, came down. For first 30 minutes, we established this range. Then we took the buys, came down, took sales or sell program there, right? Came up, took buys, established buy, came back down, sales. Anyway, we had this high, then this low, took dealing range low, we traced back into the to the range, came down, took the low again. Then this would have been our current low, took that. Now again a retracement back inside the range to see if it continues lower. Could also potentially take this to flip bias. So here we're looking for a continuation to the sell side based on the storyline of what's already happened. So let's watch and see. We're looking for a continuation to the sell side, but we understand obviously we can have a reversal, right? A retrace to reverse by taking buy side here. But what we always assume is continuation. So I'm watching to see if price wants to continue lower. Based on a storyline of what's already happened, based using the daily range. So let's see. For me, I have to physically see one side of the dealing range. I'm not gonna go based on previous price action. I have to physically see it happen in front of me. All right, then I establish a condition based on that, not based on previous price action. Right now we're watching to see if we get a continuation to the downside, right? Or if we're gonna get a reversal, because this leg is a retracement leg. Looking like we're gonna get a reversal here. This is me just being proactive. Nothing's really happened here yet. Let's get magic magnet ready to go since one side is about to get taken. Our initial draw would be this standard deviation, and we'll work our way all the way up there to that high, but we're not there yet. Alright, dealing range, buy side getting liquidated. Condition has been established as a buy program in line with our weekly program. So we're looking to be a buyer of this market. We're looking for a retracement to then continue. Alright, key level right now that I'd be interested in for continuation is 20-day high. For the retracement, this is the swing low that needs to go for me to be interested in a retracement setup. So with this retracement leg turned reversal, right? So our condition has been established, all right? We're in a buy program in line with our weekly program. In terms of entering here and anticipating a continuation of here, yeah, doesn't make sense, right? Doesn't make sense at all. So I would not be interested in that continuation if it confirms down here. So, I mean, in the retracement, sorry. Oopsies. So it will be something that I'll pay attention to. I'm just going to see if it would have even given me any contracts at all with this range here. Oh, 2 contracts, not bad. In terms of target wise though, my first target is not even, is way beyond where I'm anticipating the continuation. Yeah. Yeah, no. Not for me. Not for me today. This it will do for us though, it will give us the green light, go ahead for the continuation. And we will watch this and have no qualms. I was thinking yesterday, after my trading day was over, that this week and last week retracement setups has been not ideal, because obviously price has somewhere to go in the upside, and it hasn't been retracing deep enough for me to be interested. Obviously we've been obviously still tape reading those continuations in the premium, all right, but I was thinking maybe just for now tape reading the retracement, all right, and then anticipating the continuation, because those is, in this current climate, this current condition, those are the ones that have been proving themselves. So just a thought, just a thought, just a thought. All right, we've got a market structure shift here. We've got retracement setup confirmed. Won't be getting in though, all right, because it's just right. The entry is right next to my next point of interest. Okay, even though I understand it can retrace to reverse and take sell side, which is potentially what it might do, I'm fine with that. Fine with not engaging in price here. So we're watching this retracement set up. Entry would have been right there for continuation. All right, this is the high that needs to go for me right now. With these, right, you just have to accept the risk that comes with it, right? If you're okay with it, nothing wrong with getting in. But we're watching this regardless. See what it does. Two contracts, we'll be looking, targeting negative 1.5. Let's see how this plays out. Let's just delete that, we know what we're watching. It's a valid market structure shift as well, okay, because this swing low takes this swing high here, and also takes this swing high here, making it a breaker, making it valid for the time, 9:30. Let's see what the contract is looking like, because it's quite a big range here. Yeah, one contract, I figured. It's a big range. Oh, last line in the sand. Yeah. See how price behaves in this, what it perceives to be this first presented fair value gap. Closure above it, price coming back into it and using it and closing above. Yeah, that'll be warning sign. I don't like this, and I don't want to use the full range either. It's also not about what I like and don't like, but I'm leaning on experience, my limited experience, even though it's, yeah, it's still limited experience. Oh, we're back on the screen now. Okay, I feel much better. This is the screen I'm used to like trading on. This one was just, it was alien to me. I feel like I was look all the way looking over there, but here it's right in front of me. My entry time frame is, right here. So far, there'll be no alarm bells yet in this trade. I wouldn't feel great about it, but there will be no alarm bells yet. I'm watching this in here. For the current trade, I don't want to see no respect of it. Yep. I said for the current trade, I don't want to see no respect of it, and that's exactly what's happening. We're respecting it. We closed above this, all right. If we come back into it, and then this candle closes above here, first presented fair value gap, all right, that would be my alarm bells to reduce trade. This is a warning sign here. This next candle would confirm the alarm bells. All right, there goes the warning bells to close the trade. So I would be taking something off this trade. It allowed me 2 contracts, so I would have took 1 contract off. Let's delete that and watch the price action. We're still watching it though. This is still the high that needs to go for me to be interested in a continuation setup. Not one that I would be taking currently, all right, but one that we'll be watching and collecting data on. Like I said, until next week, starting next week, yes, I'll be happy and confident to engage in those setups. Even now, I'm confident, but I just want to finish the week out, okay, in terms of the data collecting, and come back next week ready to take those trades. Wicks do the damages, alright, bodies tell the story. Still respecting this inefficiency here. Look at the close. Came all the way down, still closed above that first presenter fair value gap. Came all the way down to 9:30 open to the high of open range gap. even to midnight open as well. And there you go. Would be getting smashed out of that. Woo, I'm so happy. Adjusting daily range because we are smashing through this candlestick's high. And now for retracement, we'll need to be this low, which is still in close proximity really to my point of continuation, my level to anticipate continuation. So still would not be gaining. We're watching this continuation set up here. Big range, very big range. It would have given us one contract to get in at. So let's see, one contract for -1, which is right here. That's what we're watching right now. Last line in the sand for me will be a closure, all right, in the main threshold of this order block here. That is what I'm paying attention to right now. Bodies are staying in the upper quadrant. Good signatures for this continuation setup so far. Market structure shift here will be the other model that we're watching and collecting data on. Drawing closer to the magic magnet, first draw on liquidity, which was the initial first standard deviation where dealing range was at. It's all in the magnet, guys. It's all in the magnet. Ding, ding. This is now the low I'd be interested in here. Which with this low, -1 is above our level of interest for continuation. So I would be interested in a retracement setup here if he gives it to us. I would need to see a body closure below first percent of fair. What this deems as a first percent of fair value gap here though anyway. I wouldn't want to just see a wicket. Now I'm refining them. I'm refining and being picky. Well, getting to a point where I can be picky in terms of what I'm looking for. This is such a beautiful journey, man. Finding yourself in these candlesticks, finding the storyline in these candlesticks, tracking it. All right, so I'll be interested here as a model I was looking at, right? I've been collecting data on this model using first presented fair value gap. Now the question is, yeah, it has to go with my narrative, right? In terms of what I'm anticipating from price. So right now we're anticipating a continuation, and this fits perfectly with the narrative in what I'm looking for in price. So we're watching this. Nothing that would be engaging in, all right? This is just another model that I'm paying close attention to and collecting data for. Oh, it's 10 o'clock. 10 o'clock, we've got opening range, buy side and sell side, confirmed. Let's get those liquidities in price. Oh, and we're taking dealing range high right there. I mean, we're adjusting dealing range. But let me get this low right here. Since we're taking that, adjusting dealing range high to right there, at the same level as open range buy side there. This is still the low. I'll need to see go. I would be interested here because -1 is before my next point of interest. So I'll be interested here. This is also would be another re-entry on that model there. Came back into first percent fair value gap, displays higher, because the market structure shift above it is in line with my narrative and what I'm looking for price. So watching that as well as this. This is now the low I'd be interested in. First draws right here. played all these relatively cool lows down here. This week is had so far it's had a trend in what it's doing. It would drop a little bit at 9:30. All right, take short-term lows, and then the continuation will carry on. This week, that's been a trend this week. So I'm seeing how price behaves in a trending market, and yeah, this is just, it's been a great experience this week. Very much so. Loving it, loving it. And it has somewhere to go, right? This is experience I'll carry with me throughout my career, right? When I come across and next time the market condition is like this, right, where it's trending, it's just in one it doesn't matter the direction, right? It's about the characteristics in the price. Experience, man, is the best. It will be your best teacher. But you have to show up each and every day, right? Whenever you can, you have to show up. That's how you get that experience. I can't get it for you. I wish I could, but I can't. I'm watching this inefficiency here with this OB. I would be interested if he gives it to me. Wicks do the damages, the bodies tell the story. Still respecting this inefficiency. If he gives it to me, I'll still be interested. Obviously, retracement setups have been low probability in this current environment. I understand that. I accept the risk. Nothing yet, nothing yet, nothing yet. Yeah, I'm watching this. Nothing that I would really be interested in. I don't like these kinds of setup. Mm-hmm. I said I'm still collecting data on those, right? But my mentor last night said, even in this current climate, he's taking trades before the macro and even after the macro. So that was um, what's the word I'm looking for? That was good to hear, right? That he himself in this current condition, he admits that he's still learning, right? Not that his concept doesn't work, but he's still learning how to adapt to this market climate, this market condition, and that he's finding in his data set that he's having to take trades outside of the macro and before the macro and after the macro, which is something that I've been collecting data on something trades that start in the macro, finish outside of the macro, but I guess he's wherever the subs, I don't know if he's starting the macro, finishing outside the macro for him, but he said he's taking trades just before the macro and after the macro as well. So that was comforting. There's a word, comforting to hear from my mentor. Still watching this continuation setup, right? Still would be in there. It gave us one contract, all right? So we're seeing if negative one gets hit, all right, for our terminus on this trade. First drawn liquidity is right here where Magic Magnet is at currently. That line there, which we're in close proximity to. Let's see how it plays out. We've got a higher time frame Magic Magnet in terms of where price is heading to over there. Why you be shutting up on me? Why? Why? Tell him that it's human nature. Why? Why does it do me that way? There we go. First draw on liquidity there. Still no targets hit, right? Currently for our trades. Trade. Need to learn to pronunciate my words, you know? But first draw on liquidity, getting smashed there. Alright. We didn't have any highs, but we were following it based on our dealing range. Dealing range standard deviation. Alright, now our next draw, first draw on liquidity getting smashed here. Next draw on liquidity is next standard deviation from the current dealing range, which is in close proximity to our -1. Okay, so I like that. We like that. -0.5. That is 90% of the time you're guaranteed 0.5. That is a bread and butter setup right there. 0.5. Entry here, getting out here, bread and butter. I might have an account that just does that. Because that 90% of the time you're guaranteed -0.5. So I'm gonna look into having an account that just does that. 0.5, that just risk whatever, it doesn't matter. I'm getting in, I'm getting out at 0.5. Don't matter. So the one contract will be out here at 0.5 and just leave it alone. Yeah, for sure. Let me have that down. I'm gonna have an account. It will be a bread and butter account. We'll call it bread and butter. And we'll have our target as 0.5, -0.5, because that right there, that's gonna meet your ends right there. Let's get rid of this. Why? Tell him that is human nature. right here, right now, this is the low. For 10 minutes. See if we can find a good question here. How do I control emotions while trading? How do I control emotions while trading? It's simple. Have a process, have procedures and protocols, right, that you're following on a consistent basis. If this then that type of algorithmic thinking, right? So you're not bringing your emotions into it, right? If you have a process, right? If you have procedures and protocols that you're following, right? You're just showing up and you're following that process. You're following that procedure and protocols. You're not bringing outside influence or emotions into it. It's not about how you feel. Sometimes I say, when I say like I feel like I don't like how I don't feel like getting into this. I don't like it how it looks. Then I remind myself it's not about how I feel, right? Is it meeting my criteria and my protocols and my processes? If it is, yes, I'm gonna pull the trigger. Obviously, experience, right, will teach you or will show you the types of setups that you want to get in more than the other ones that you don't want to get in. But for now, right, initially when you're starting, have a structured process, right? Have procedures and protocols that you're following, so you're not allowing emotions, right, to come in. Since I've been doing this, all right, since you guys been seeing me do this, because I've been doing this for a while, since we've been here, right, there's really been no emotions, right, when I'm trading. Obviously, I have emotions, but I'm not like elated, I'm not like excited, I'm not upset, I'm not like, you know, revenge trading or fear of missing out or angry at the markets. I'm just here following my processes, following my procedures and protocols, and the outcome is out of my hands, right? Also, how you control your emotions, right, is to become more process orientated and not outcome focused, right? Focus on the processes, right? Judge yourself based on how you followed your procedures, your protocols, and your processes, not on the outcome of the day, not on whether you made money or didn't make money, all right? Not on how many losses that you took, not on how many wins that you took, but whether you followed your processes, right, on the day, right? Whether you followed your procedures and protocols, that should be your main judgment for yourself, right? Because once you start focusing on the outcome, that's when emotions come into play, right? So how you control your emotions is have a structured processes that you're following on a consistent daily basis, right? Have procedures and protocols in place. Have a system behind you, right? And a logical system, right? If this, then that, algorithmic type thinking, right? That eliminates emotions. Like right now, where I'm at, despite what was going on outside, right, with the outside influences that do come into trading, if you want to say it doesn't, it does come into trading. Right now, where I'm at, I'm so dialed in on my process that regardless of what's going on outside of me, I don't let it interfere with here because I know what I'm looking for. I know what I'm doing, right? I have a structured process in place. I have procedures and protocols in place that I've collected data on, all right? Collected enough data on to have confidence behind it to know that, hey, no matter what's going on, as long as I show up, right? I follow my procedures, I follow my protocols, I follow my processes, all right? Outcome is out of my hands. That's my one job here, really and truly. And that's how you, I've got the question, that's how you control your emotions. Yeah, how do I control emotions while trading? It all comes back to having a process, having procedures and protocols in place, right, that you're following on a consistent basis, understanding the market that you're in, right, having one model, not multiple models that you're switching between. There's nothing wrong with having multiple models Okay, but initially have one model that you've collected data on that you can rely on, right? At least have that, and then you can obviously add more models into your arsenal. But if you don't have one model that you can rely on, there's no need for you to be looking for other models. Like me right now, I'm watching other models, right? Using the first presented fair value gaps. I'm watching those, right? But I already have one model that I've collected data on that I can rely on. It's not like I didn't have that one model already and I'm trying to add more to it, right? And even in adding more to it, I'm only just data collecting. It's nothing that I'm adding to my arsenal yet. I'm just collecting the data on it, like I've collected the data of my one model that I'm currently using, right? And then have a plan and process in place, right? It all comes back to the three things that we talked about in the beginning that builds confidence in your trading edge. Everything comes back to it. When it comes to trading and having a trading edge, it comes back to those three things. Understanding the market you're in, right? Understand the market as a whole, right? And the market that you're in, right? Because the market as a whole is different to the asset class that you're trading. Understanding those two things, right? Having one model that has IPTA signatures, that's crucial. It has to have IPTA signatures, right? That's the algorithm that runs the market. Whether you want to believe there's an algorithm or not, there's a mechanism that runs these candlesticks, and you have to have a model that has those signatures in it. All right, and then you have to have a plan and process that you're following on a consistent basis. You have to have a plan for your account. You have to have a plan for your risk management, and you have to have a plan for your trade management, right? How are you going to be managing the trade, right? How are you going to be managing your risk, right? What is the purpose of this account? What's the plan of the account, right? Like I just mentioned, the bread and butter account. That would be the purpose, the plan of the account, right? So bread and butter, right? I will be same model, right? Targeting full pull, right? No partials, full pull at negative 0.5. That's the account plan right there. Simple, right? Doesn't need to be complicated, right? Then you need to have a process that you're following. Now, for me, my process will be the same regardless. I've curated this process. I like it. It's simple enough for me to do in 2 minutes, right? Remember in the beginning, I had 2 minutes until kickoff, and I was able to do my process, my steps, right? And then it's about waiting, right? Waiting for the one side of the market to get taken. Identify your dealing range, establish a condition. In order to do that, you identify your dealing range, right? You know key liquidities above and below, right? Which will give you your draws on liquidity once one side of the dealing range is taken. Then you're waiting for the market to show you its hand, right? Which it did, right? We're heading to -1. We haven't hit it yet. For me, it will be, it's always going to be one hand or less of what it says here. So we're looking at 30, 35, 25 up here. We haven't hit it yet, okay? Drawn liquidity, next drawn liquidity, we're in close proximity to it. We haven't hit it yet. It's just simple dimple, you know? All the questions that you're going to ask about trading comes back to those three things that I mentioned in the beginning of every stream, all right? Confidence in your trading edge comes from those three things. You have to know it, you have to breathe it, all right? You have to understand it, and you just have to have planning processes in place. It's that simple. That's how I've been controlling my emotions, right? I'm not emotional here. I'm not. I might be excited when I see certain things, right? But that's not me being emotional. That's just me seeing certain signatures and being like, oh wow, this is amazing, right? Can't believe that this is happening, right? But that's not me being emotional in trading, if that makes any sense. There's nothing wrong with having emotions when you're tape reading or like you're demo trading and you're noticing, or you're trading and you're noticing certain signatures in price that's increasing your understanding of price action, right? Increasing how you're reading these candlesticks, right? How you're reading the storyline the price is telling you. There's nothing wrong with that. I advocate for that. Show excitement. That's what pushes you to the next level, right? To keep showing up, because this is tough, right? You're gonna go through periods where you feel like nothing's working, you're not learning nothing, what you're doing, nothing is happening. So when you do have those moments, enjoy them, right? Relish in them, because those moments is what keeps you going, right, through the hardships. -1, terminus on the trade, getting smashed. Solid stuff today here. Ooh, we we've had a program this whole week, right? We've had a program, the similar characteristics. Like we can go back to the 3 mornings that we've been through and see similar characteristics in price. All right, those are the things that I'm paying attention to. Those are the things that excite me. All right, that I'm happy when I see those things, right? But in terms of emotions, when I'm in a trade, forget that. You ain't getting me again if that with that. Just in dealing range. All right. Let's see what else this trade will offer us. Sometimes I can't speak, man. uh, but anyway, next draw liquidity right now. All right, we'll be adjusting to this next standard deviation of the dealing range. Okay, so 2 draws on liquidity so far smashed. Our terminus on this trade has been hit. We're watching to see what else it offers us. It offered us 1 contract to get in, okay? So that means we'll be getting out of 4 contracts at -1. Obviously, if you had more contracts, then it will be a partial and stop will be adjusted to 0.75, but it didn't. So it is what it is. Solid stuff though. What I've noticed yesterday is how price is using old highs as support, as a stepping stone to the next high. Ooh. See, things like that I get excited about. You're allowed to get excited about things like that when you notice certain signatures in price, right? But emotions while you're in the trade, while you're trading, that's out the door, out the picture. That was a good question. I enjoyed answering that question. Clip this. I think that's my thing told me to say that when I want to clip something. So clip what we just talked about, all right? When you're listening, clip that bitch. Excuse my French. Talking to my AI pal that does my clips for me. Real solid stuff I'm seeing here in these price action. I'm liking it. I'm liking it. Malaika, malaika, malaika. Magic magnet doing its job, attracting price to it. Let's go, magic magnet. Do your damn thing. This low takes this high here. So this is now the low I'll need to see go. 10:30, first hour of trading is behind us. Terminus on our trade has been hit. It's a good morning. It's a great morning. It's a great morning. We took no trades and we feel great, happy with the price action that we're seeing. Like I said, tape reading is a different kind of a level. Like just knowing what you're looking for in the price action and watching the candlesticks, paying attention to the breadth of the candlestick, the storyline, the inefficiencies, how price is behaving in the inefficiencies. Is it giving you characteristic that you're on side or off side? It's just there's no words that can explain the feeling right now. No words whatsoever. All I can say is just submit to the process. Submit to it. There's a rhyme or reasons why and a process in which you need to do things. Just submit to that because There's a reason for it. And that process is have a plan and process, right? Or no, understand the market, right? Have a model. You need to have a model, right? Have a plan and process, right? And the steps are back test your model, collect data, go back into previous price action, see when your model panned out, pay attention to the characteristics and when the model panned out and when it didn't pan out, right? When it took a loss, what did you see in the price action? Collect data, back test, back test, back test, back test on previous price action. Then you want, once you've collected enough data and you're confident in your model, right, that it pans out more times than it doesn't, then you want to tape read and live price action. You're not engaging in the market. You're just tape reading, like what we just did today. We're just watching the candlesticks print. You're anticipating your setup. You're identifying your setup, and then you're watching the price action. All right, do the things that you've watched, you've looked at in your back testing. Right? Is it doing it? Is it not doing it? You do that for a few months, right? Until you're building confidence in being able to see the model and execute on them, and being able to execute on the model, right? Being able to see the characteristics that you want to see once you're in the trade. So this is how you take the emotions out of it, right? This is how you take the emotions out of it. And then once you build enough confidence in tape reading, all right, then you go into demo. Right now you're working on the execution part. Are you going to be able to pull the trigger in time, right? How are you going to manage your trade, right? How are you going to feel when you take series of losses using the model, even though you've seen it work, right, in previous price action, in your tape reading, in your back testing? How are you going to feel when you take series of losses? Are you going to feel like the model isn't working, right? Are you going to want to change things up, right? Is the losses, right, your risk, that's where you get accustomed to your risk, right? Is this enough risk for me? Is this something that I can physically take, or do I need to adjust my risk? That's where demo trading comes into play, right? So once you found in demo trading confidence in it being able to execute the model, right, having a risk management plan that you're more than happy with, right? You feel no type of way when you take that loss, right? Even if it's a series of losses, you feel no type of way when you take the amount of series of losses, all right? Then only then you do a few months of that for demo trading. Then, all right, you'll be ready to, when you feel it, right, when it becomes boring, when it becomes mundane, when it becomes just like a regular job, you show up in front of the charts and you know what you're doing. Nothing surprises you, nothing shocks you, there's no emotion, you're just thinking logically, you're like a robot, really, just in, out, your day is done, you go about your day. Then, right, you'll be ready for live trading, funded accounts, wherever you want to go, you want to do after that. But you have to have that realization that, okay, I've done all of this. Every time I show up, I've proven to myself that I can be disciplined enough to follow my processes, my precision protocols. I don't care about the outcome because the outcome is out of my hands. And so far, I show up, I'm doing the same thing. It's boring, it's mundane. It's just another day on the job, right? Just another day on the job. You need to feel like that. You need to feel like that. Let's see this high 1525, 5275, 5250. No, we don't take it. This is still the low. Oh, we've taken that. I am interested here. Okay. Too busy running my trap. Let's get the stop first. We're looking at 375. Oh, I think it's there already, isn't it? Yeah, 375 solid. Let's get one off here. 8975. Buy back one. Let's delete that. Buy back one at 6125. Final terminus at -2 for E. Let's do it here and then drag it up. We're looking at 42.75. I accept the risk here. I want to see how price behaves in this inefficiency here. I want to see you respect the lower quadrant. Last line in the sand will be involved in this inefficiency, but also body closure in the main threshold here. Yeah, now it's out of my hands. I've set my limits. Just have to pay attention to the price action, see what it does. I accepted the risk that comes with the trade. Nothing I can do. Let's get ready to buy back one if we get a body closure. And adjust the stop. Nothing yet, but we did close above me consequent encroachment of that inefficiency. So I'm alert, right? But nothing for me to do yet. -1 is above my next point of interest for continuation, so I like this setup. I like that about this setup. We have time, right? And we have the setup is a breakout entry. All right, this swing low takes this swing high here. Watching this tiny inefficiency in here. I want to see price disrespect that for my trade. If this same candle takes me out, takes me out. Understand this current climate condition is tough for retracements. It's been real tough. All right, buy back one because we've got a body closure. Let's adjust this to 2. 375, sell, stop. 2. Let's close one of these off. da 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 da. It's back. It's back. It's back. Probability of this trade obviously has reduced for me because of that body closure on the main threshold. And we use it, close above it, came back into it, close above it. Yeah. Definitely done for here. But it's not over until the fat lady singing, until the swing high is taken. But we're close to the fat lady singing. She about to stop. She about to start her opera. She about to sing, 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 sing. Da 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 da. Oh, you know what? I didn't even take a look at yesterday's price action. I was too busy doing the journal. Yeah, when I backtest this weekend. Not at all what I want to see in my current trade. You know, not at all. What I want to see is price close below this inefficiency here that I respected. That's what started this whole thing. If I don't see that, yeah, no hope for this trade. About to smash me out. We'll be ready to adjust dealing range when it does that. Nothing here. I would be interested in the continuation, really and truly. I don't think we're gonna make it to 950 macro. We ain't gonna make it to 950 macro. There we go. Thank you very much. Understood. The more experience I gain in being correct, in being able to identify that I'm offside, okay, the more confidence I'll be able to just close the trade and feel no type of way. But right now, I still have scar tissues. But for now, I'm fine with what I got going on, just reducing risk in the trade. More confidence, I'll start to take more off, all right? Like this was 3 contracts. The more confidence I gain, I'll take maybe 2 off, okay, knowing that I'm offside, and just leave the 1 left. Let's see what the loss was here. This account is going through it. 186. Yeah, save myself some bucks, right? Probably not too much, but I saved myself something. 186.50. I can eat those all day. We'll keep this here. The let us know that, when we knew we were offside. And that's a level up that I'm very content with. Very, very much so content. This is the low that needs to go for next point of interest for retracement, which we'll tape read for now. All right, we'll tape read those for now. Because these retracements have been killing me this week. But I'm understanding the current climate, right? Gaining experience and understanding the current climate. PM session gave us a nice one yesterday, though. Just morning session hasn't been. It's just been going up, and then we'll get a retracement, a little bit steeper retracement in the PM, and then continue. Heading to negative 1.5, and our draw on liquidity. If it gives me another opportunity here, I would be interested. It would be my last trade of the account here today. I would be very much interested. Ooh-wee. That is a progression that I didn't even anticipate that I would have. Oh man. Marcus said, I just want to go higher. Watching this inefficiency here. Mm-mm. Mm-mm. closer to the higher time frame draw on liquidity. Negative 1.5, getting smashed. Heading to our Magic Mike. Not Magic Mike. This ain't Magic Mike. This is Magic Magnet, baby. Shit. You know how hard it is to get this thing to stand up? My ghetto setup I got going on here. Hey, we all gotta start somewhere, you know? We all gotta start somewhere. This is my start. This is my somewhere. We good? We good here? Alright, we good. Messed up my magic magnet though. Let's delete this. Watch the price. Negative 1.5. Seeing if our third draw on liquidity here will get hit. Right in between where the lines are on the magnet. One thing I have been priding myself on is my draws on liquidity, right? Whether I'm in there to get to it or not, I've been able to identify the draws on liquidity, and price has 90% of the time. So far, actually, it's been going there 100% of the time. If I look back at it, yeah, 100% of the time. Since we started this, what, a week ago? It's our second week. Feels like so long. But anyway, DJ, anyway. What you guys know about DJ? PM session, know about DJ, Zoom, private group. Building a community, well, trying to build a community over there, right? And here too. It's a private group session, right? Trading session for the PM session. For the people who join the program, you know? If you don't join the program, you still get the information for free. Alright, because I still put it out there. Either way, I just want to help. Because I know how hard this industry is, but I also know the power of it, right? So when it's done right, it's such a beautiful thing, man. It's such a beautiful journey. It's a beautiful process. It's enjoyable. You have fun, you know, you don't take it too serious. When it's done right, whew, sky is just the beginning. When it's not though, it can cause some shit. It can cause some havoc. Ten more minutes on this macro, 1050 macro. Take us to our third draw on liquidity. Show us that it's the magnet really that does the job, does the work, and not us. Not the processes, not the model. The magic is in the magnet. I'll need to see if this low is below that 5125, 513. Nope, it's not. So this is still the low. I'd be interested in. Falls asleep on me. Don't fall asleep on me. Don't do it. Magic magnet. Got the magic stick. We got the magic magnet over here. Da, 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 ba, ba. Let me see here. Oh, negative 2.25. Close proximity to a higher time frame draw. I was paying attention to this inefficiency, support and price. Got this small one in here with this OP here to take us to our drawn liquidity. Beam me up, Scotty. I'll do a trade performance review in a bit. I won't be taking any more trades this morning. Save my bullets for PM session. It gives me cleaner retracement setups. The low highlighted here is still the low I want to see go to be interested in anything. Oh, let's adjust the dealing range. Oh, that changes the low to this low. Let's do better with that. Paying attention to when dealing range needs to be adjusted. If this plays out, we will watch it. We'll watch it. Sit more central. There we go. Confirm there. Let's go ahead and pay attention here to this retracement setup. Would have been tagged in that. Let's even use this. Four contracts. One off here. 2, 3, 4. 2, 3, 4. It's negative 2.5, which is still above the point of interest for me for continuation. So I like that for this trade. Let's see how it plays out. Watching to see how price behaves in this inefficiency here. There's no gap there. You also have one above it here too. Macro's about to be done. disrespected that one. Paying attention to this one here. While we watch this do its thing, last line in the sand would be body closure here, which is it will be in close proximity to our exit anyway, but body closure there. Let's do an overview of our morning and do a trade performance review and wrap up over here. So morning, we identified dealing range. We had our condition established as a buy program, which was in line with our weekly program. Okay, we saw this retracements up. However, we didn't engage in it because it was in close proximity to a key level that we would be interested in anticipating our continuation on. Okay, the entry is literally right above that level, so it just didn't make sense for me. All right, so I decided to tape read that trade. And what it did do is give us the green light go ahead. I think we'll be getting smashed out of that. Happy I decided to tape read here because I'm getting a trend, all right, and I'm seeing what the trend is this week, and retracement setups have not been ideal. So for the remainder of the week, or at least in the morning anyway, we'll be tape reading retracement setups. PM sessions, I've noticed they pan out more times than not this week, so we'll be saving retracement setup for PM session and letting the morning do its thing, really and truly, just for this week, just because of what I've noticed from this week alone. So yeah, avoiding another loss here just by tape reading the setup. Nothing wrong with that. Valid setup, right? Met all the criteria. Just currently what the market's doing, right? It just is what it is. Any other day, it would have done its thing, retraced at least, and then continue. But the market has somewhere it needs to go, up here, right? Magic magnet on the higher time frame is strong too, you know. Heading to our third draw on liquidity there. Anyway, back here. So what this retracement setup did was give us the green light go ahead to anticipate a continuation setup, where we saw that happen right here. We traded to and through a key level, which is 20-day high, swing, displacement back up, market structure shift back above it. Big range, either way, gave you one contract, and we were out of the trade at -1. So far, it's given us -1.5. And that was pretty much it. We saw this retracement setup, we engaged in this one. Okay, we had time, we had price, just didn't pan out. It is what it is. Market is strong to the upside. It doesn't want to retrace. We knew we were off. Alarm bells went off when we closed in the consequent encroachment of this inefficiency. But definitely when we close above mean threshold of this order block, all right, we reduce risk on our trade. And obviously we were aware that we were potentially offside on a trade, so we reduced risk and it came to take us out. I'm loving that part of my trading though. Like, the only thing I'm taking away from these losses is my understanding and seeing the characteristics that, hey, I'm potentially offside, so do something about this, right? Good. Out of the losses, right? Out of the losses is how I really level up and grow as an analyst and as a trader. If I look back, right, in my trading journey, my trading career, it's been the losses, right? It's been the majority of the losses that's like leveled me up so much, because I'm seeking that. I know I can't mitigate all my losses, right? Because losses are the only thing promised to us. But the ones that, you know, I can mitigate, I want to be able to mitigate them. All right. So that's why I really observe my losses, right? I really analyze the losses and be like, okay, how could I have avoided this loss? Was it possible, right, to have avoided this loss? And that's how, you know, I've been able to refine and adjust my processes and my procedures and protocols to where we are. Now is the next step, right? It's the next step of how can I mitigate. I know I'm not gonna avoid losses. I can obviously mitigate some risk, right? And that's where recently I've been seeing and pricing in terms of where I can at least reduce some of the risk, right, of the trade. Not mitigate the losses, but at least reduce the risk. But yeah, anyway, we took this, ended up being a loss. All right, so this retracement set up as well, ended up being lost. There was nothing here for continuation for me that I would personally engage in. Neither, same thing here. There's nothing really here for me for continuation that I would engage in. I will be paying attention to at least using dealing range high, and the same way I would use an old high, because if you did that, then there was something here, and if you do that here, there's something here. But anyway, let's adjust dealing range. Third draw on liquidity, getting smashed. Perfect end to the morning session for me right here. I'm happy to end it here. I'm happy to end it here. Witness this retracement setup, obviously, as you can see. All right, the same candle that gave us our warning sign, right, is the same candle that took us out. So we wouldn't have had the opportunity here to reduce risk in this trade, okay, which is fair. All right, which is fair. But yeah, reading the price action is just grown so much. Interesting. Anywho, what I did well today, all right, is that I showed up. All right, got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. All right, getting a better read on price action and a better understanding of the characteristics that lets me know that I'm offside, so I'm able to at least reduce risk on my trade and not take a full stop, a full my initial full risk, right, that I put into the trade. So I like that. I like that. Yeah, showed up, followed my processes, followed my procedures and protocols, and didn't deviate from it. So I'm very happy and pleased with my performance today. All right, I'm showing very much discipline. All right, in following my processes. So that's how I judge myself now. So as long as I show up and follow my procedures and protocols, follow my processes, it's a good day for me. Outcome is out of my hands and it's in the rearview mirror. Where I fell short today, woke up by a decent hour, got my morning routine in. Chart wise, showed up, stuck to my processes, stuck to my procedures and protocols, didn't deviate from it, didn't step outside of what I know to look for in the market. So yeah, I don't think I fell short anywhere today, really and truly. Very happy and pleased with my performance so far this week. My performance has been top tier for me. All right, it's something that I want to maintain and keep moving forward with it. How I can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses, which I am experiencing, right? I'm experiencing a series of, this account has been experiencing a series of losses. But either way, we're not gonna let that deter me, distract me, all right, from what I got going on. I think I got a solid foundation in terms of my processes, my procedures and protocols. And I just have to keep showing up and doing the same thing, and eventually, right, the probabilities will be in my favor. Keep taking small steps in the right direction. Analyze the data. Analyze the data. All right, and see how we can adjust and refine based on our data collected. Okay, but other than that, solid day for me here at I'm the Trader Capital. Yeah, very happy with what I'm seeing in price action and in my understanding of the price action in my model, my processes. All right, is yielding to me in a climate that's very hard to trade in. So like, I'm getting powered up, right? Being able to find my model, all right, and see it pan out in this environment. Imagine when the market is like free and open and not as hard to trade, all right, as manipulated as it will be, right? I'm gonna be like, it's gonna be cakewalk for me right now. But yeah, very happy and pleased with that. No complaints from me here today. No complaints. Before we wrap up, I want to leave you guys with this. All right, there was a time, and don't you wouldn't believe it looking at how I'm trading now. There was a time that I would finish a trading session and still feel lost. Even on days I made money, right? I didn't really know why it worked. And on losing days, I had no system to fall back on. Those days were tough. That's the difference between guessing and having a real edge. And here's the truth, most traders only focus on entries, but consistency comes from the system behind the entry. Having something to fall back on, that you've collected data to have confidence and trust in it, that the probabilities are in your favor. So when you take a loss or when you take a series of losses, you understand that, hey, that's just how the cookie crumbles here, right? The numbers are in my favor. I just have to keep showing up and sticking to my procedures and protocols, and the probability is always in my favor as long as you're managing risk, right? So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created a 10% to 1% club. That's where we go deeper into all three pillars the full risk model, the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact processes to follow on a daily basis. So if you're serious about becoming consistent, that is your next step. I used to think that the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. I'll see you in the next AM session, 9:15 kickoff. Thank you for joining us here at I'm the Trader Capital on our live trading floor. As always, I'm the trader here, signing out. Good luck, good trading, happy hunting.